Hey, and welcome back everybody. It's the Mohawk Forex True Scalping team back again for another great news day. We've already had a good day this morning with London Open pre-trading and on DAX and on our cable trade as well. All hit TP and we're already smashing our TP target for the day already, so going well. As you can see, we've loaded up on our chart, 5-minute chart. We're looking at US30 because we've got that durable goods news, as you can see, coming up in approximately 10 minutes time. A nice high impact news to kick off our trading for the New York session pre-market, so it's an hour before. We've got our RSI scanner, we've got our trend bar, and like I say, as from yesterday, I've added some signals in there for people to follow live if they want to. As long as you combine them with everything else, and they're pretty good, pretty accurate, pretty good, and give us, if nothing else, as an alert, give us a heads up that the market might be changing direction. And we've got our moving average cloud as well, just to help auto fib. So everything's loaded up, not too complicated, easy to follow. And like I say, we're trading fundamentals first before we crack on with the open. Like I say, we took some nice wins on cable earlier on. We took this sell here and bagged ourselves 50 pips. There was a buy before that on the open, which was another 10-20 pip winner, and in fact there was a sell just before the European Open. There was a buy end of Asian Open, there was a sell, buys. All these signals were pretty bang on. I mean, they're not always going to be like this one here. Look, this came, that was a fake out. You had the green trend bar, but you had no confirmation on the RSI. So you know, this is the kind of thing we're looking for. And obviously I can put the cloud on there as well. There we go. And our Fibonacci. So I'm just going to put the moving average cloud on there. These are the settings that you get. Supply and demand, this is all part of the AX trading system that you get. Obviously you can go to the website www.mohawkforex.com for information on there. So just drop me a message, drop me an email about what you want to do, what you want to trade, and I will try and help you. And you can join our VIP Discord group. So cable is setting up for a trade 30 minutes after the open. So we're just going to watch this play out, where we've hit this nice demand zone down the bottom here that is retested. We've got a nice double pod at bottom and a W pattern forming second leg that's just hit our first TP line already on the buy there, so that's quite nice. Stop loss would have been below that supply zone or below the bottom of the fib chart. So we'll wait on this. We're just going to watch this. We've already had some good pips out of this, so we're going to focus on US30. You can see here, look, we've got a sell label pop up across into the neutral zone. So we'll wait for this candle to finish, obviously. 1 minute 30 left to make sure it doesn't repaint. That's what you've got to do. And like I say, we would put a trade in, but like I say, we've got to wait because we've got this news coming that could trap us before we end up taking profit. It's flashing in and out as well. And then also we're going to look at oil. We've got some oil news later on. Obviously it's in a range now, as you'd expect, before New York opens. It kind of does some nice moves. We've got a nice buy here, look, from end of Asian session into London. There was a nice sell here midway through the London morning, and then you had a little buy there you could have taken 10 pips. The sell was a fake out. The next buy again was a fake out. You could have made, you might have took that, but you're trading right on a demand zone. So again, basically heavy resistance, so you don't want to be taking a trade right against it. And now, as you can see, we're just waiting. We've got a nice little sell possibly coming up on oil now. Look at this, this could be good. Let's have a look. Let's just see if this is going to push down. We've crossed RSI out of our neutral zone. We've got a red on the trend bar. We've got a sell signal that is trying to set. It hasn't set yet. There we go. It could repaint. Like I say, you have to wait for the candle to finish ideally. We'll see on this. Just watch this as a bonus trade. Again, just want to be 10 pips really, nothing major. Just setting up to watch it, so if we get an alert on that, we'll trade that. It's all about the durable goods. There we go. Coming up in the end of this candle. Actually, we've got 5 minutes left, everybody. Let's plug into Bloomberg as well.
And we heard that from Stephen Englander as well, but you got to get there, John. And to be clear, if I do a bunch of fancy technical, I want to make this clear. We're not at the angst of the Plaza Accord. We make jokes about it, but we're nowhere near the Plaza or the Louvre Accord of the early 1980s when you look at the math of all this. Except we have China. And what do you do if you get China all of a sudden from 6.87 out to 7 or 3?
So yeah, after the durable goods, we've then got the New York Open, and then we've got the pending home sales to end our session there. And then for the group, we'll trade the oil inside our trading group. But the pending home sales should be another good indicator whether we're into a recession or not. But the durable goods, this is the main one here.
John, really important. Mike McKee just emailed me and he says we need to be bear aware. Earphones on the set in Jackson Hole. Dangerous.
And there's the push down on oil. Nice sell signal. And we're going to end that. Brilliant. $35 there on that trade. There you go. Live trade straight off the bat. I'm just going to print that result as a bonus trade. Again, just shows you I was just in because of that sell signal. It gave me the heads up. I didn't enter straight away. Waited for it to stick. Everything combined. RSI dropped out the zone look. And there you go. There's our first trades. Nice win on oil. And usually I don't trade this kind of pre-New York session, so that was a nice cheeky little scalp. Got out as price, hit the 5.5 on the fib obviously, so just a scalp, but that was enough with two lots just for a couple of pips. Like I say, that was £28, about $35 there in literally a minute, so that's a good start. So we'll keep watching oil, but we really are watching this durable goods to see what we're going to get here. So there was a nice signal, nice buy here, that was a winner. The sell was also a nice little, even at the end of that candle, look, but you still got 10 pips. The buy was a fake out because we were red trend bar. The sell again didn't happen, no red on the RSI. The buy was a good buy, green clad, green trend bar, green RSI, easy. The sell was also red, 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 and the buy here was also a nice little buy that was also a win. Even at the top of the candle, look, there was 30 pips there. So I love these little signals. I'm not a big believer in any kind of predictive thing, I've said that before, but what we use these for is if you've got your phone, it just gives you a heads up. It doesn't mean automatically enter the trade. You wait for everything else that we teach, price action, everything else to come into good before you take the trade, but at least this gives you a heads up where you're looking to take a trade. And sometimes like this, when it pops up, you'd be in on the trade just like I did on oil there, straight in, no messing. Grab some green and get out. Don't want to hold because I say we're literally right on this news event that's coming up. Right, let's log in onto US30, make sure we're on there, we're trading the right things, bang. US30. We're just going for the smallest lot size I can do. Again, which is 10 pips. 10 cents a pip, sorry. And there we go. Here's the result, and it is better than expected. Look at that. Green, green, green on the durable goods. So let's see. Let's see what US30 does. Let's see if we get. It's going to go the way or it's going to reverse off it. Month on month is 0. X defense, X transport.
All to help improve productivity, mitigate risk, and inform decision making for the comprehensive platform that helps you work smarter and faster.
Only just, but X defense is good. So let's see if we get a move. There's the sell.
A little bit of economic data in just a moment. Equity futures positive 0.2% this morning. Good morning. On the S&P we advanced. On the Nasdaq up 0.2% as well. Yields unchanged at 3.048% on a 10-year euro dollar. Deeply negative now by 0.4%, 99.31. We've got to catch up with Mike McKee in Jackson Hole, Wyoming on some economic data. But Mike McKee, before we get to the data, we've got to see the hat. We have got to see the hat. Is this what TK is going to wear a little bit later this week?
We'll bring it out for you in the open, John. That's a tease ahead for all your viewers.
There we go. I'm looking forward to that.
It's edge of Kenny Chesney, right, which is good.
Well, we are back here in Jackson Hole,
when we're done.
We are getting ready for the Kansas City.
There we go. There was the sell. I took the signal, and again, that was a nice win. Thank you. I took 5 positions on that, and we managed to bag 5, 10, 15, 20, 30, $50. $50 there.
That's a little bit better.
Nice on the win.
But below what we saw last month. Capital goods orders, non-defense, ex-air. This is your basic what goes into GDP for business spending kind of stuff, and that's up 0.4. It was up 0.9 in June.
Again, as we know, US30 goes against the news. It was better than expected.
Business spending, and these are July numbers, and why it might be a little bit concerning is because of those S&P PMIs we saw yesterday that showed a real collapse in manufacturing during the month of August. So
most of the time, like I say, US30, you know, it's bad news for stocks.
Goods are very volatile, but it's not the best possible news
so
to start this
overall, good news.
Mike, very quickly,
means a nice sell, and like I say, I love these sells. I mean, they come in as the news. It just with the momentum. We had a red trend bar already.
Well,
and again, why did it end the trade? Well, because we're just about to hit the 236 on the Fibonacci. If it breaks the 236, we can go again. But like I say, when you trade in the news, you just want to be in and out. We're there for about 10 pips. We've got about 8 pips per trade there, but we're still bagged. So we're at best part of, we're nearly up $100 already in less than 10 minutes trading. So
tomorrow morning, Tom.
It'll be good to see, and he'll lead our coverage.
And we're just using the small lot sizes.
Particularly, it'll be interesting to see what James Bullard of St. Louis says as well. We have a most eventful half hour. We bring this to you commercial free. Later on, we will think of Julian Robertson, who's died yesterday at 90 years old. We will talk on Wall Street. But right now, on the American labor economy, Tom Perselli joins as chief U.S. economist at RBC Capital Markets. Tom, I want to dovetail with another shop. This came out moments ago from Kalanovic over at Goldman Sachs, who's an equity strategist, and he posits good equity markets, forget about that, because of declining inflation. Do you at RBC
again, this is why I like to use the real candles on news events and opens to get the real genuine price action. That's what you want to see. I'll show you how it looks like on Hakanashi. There's your Hakanashi, you see. So there was no sell signal. Yes, it was still red, but you can't see the actual movement inside. So what would you do on that? You'd have to just risk the fact that you're right. rather than wait for the thing. This system is brilliant when we're trading outside of news and opens, and we're just scalping and following a trend. That's the advantage of this. If you want to do actual price action scalping and news events like this, it's what you want to see. So now you see that the sell label repainted and actually stuck, so that's a bona fide sell, which we took. Now to sell again, we want the RSI to come out of the neutral zone 45, and at the same time price should break this 236. It could range now between now and the start of the open, we know that, but I'm just telling you what you should be looking for. And you can see that the cloud has just gone red as well, just flipped red from a moving average cloud.
How do you factor those things in? When do you start to think maybe I'm wrong?
So if everything was synced, you can hold longer. If you're just gonna go against with the RSI not being there, then obviously you just want to grab the pips and get out.
Because I can see a plausible scenario.
Let's see if it's trying to break this level.
Are remaining, sort of stable at high levels. If you do get this drift higher from an energy price perspective, if food prices continue to remain firm, although we're let's just be clear, we are seeing signs that food prices are slowing down. But again, just to your point, like just for fun, let's just say that all of that does happen. You could see a scenario where headline prices remain, again, relatively high.
So if this breaks here, we could get a sell down to that 382.
And this is something we've been talking about and writing about for quite some time. The Fed needs to unhitch their wagon from headline prices. They can't control that stuff. They can't control food or energy prices. And I know it's going to be a question of, hey, but what about inflation expectations? Yeah, but I get that. But if inflation expectations are rising because of things that the Fed can't control, then I think the Fed needs to make more of a distinction in that regard. And so we would actually argue that the Fed is supposed to be really focused on core. Powell and others within the Fed have even recently said that that's what they're supposed to be following. But I think they've just got caught up into this loop of they've really only talked about headline prices. I think that's going to come back to haunt them if you actually don't see headline prices slow with core, which is what we expect.
Okay, so let's say the Fed comes out with this nuanced message that you're putting out there, which is this inflationary kind of feel, gaining wind next year and giving them more space. If they say that, doesn't the market rip? And this is what I asked Gloria Heinel, and this is sort of the conundrum. Financial conditions will move against them, especially considering the expectation for a hawkish speech from Jay Powell.
Yeah, I think that's totally fair in the immediate term. But let's just be clear: there's a lot of challenges in the backdrop right now, right? Like I know some people keep on latching on to this idea that hey, the payroll report showed acceleration in job gains. I get it, but does it make sense, right? I mean, so I think I heard Tom earlier say, like, look, labor is a lagging indicator, and he is 100% right. And it's funny to me that people just seem to sort of lose that narrative. So, but let's talk about the acceleration in jobs, which people are still talking about 2 weeks, after the report, or 3 weeks, whatever it's been. Jobless claims are up. Even if you make the adjustment for the sort of the seasonal factor thing, they're still up. They're about 30% from the lows. That tends to be consistent with potential seeing job losses shortly thereafter. Also, it happens to coincide with countless companies talking about the idea of laying.
If RSI goes red, breaks out the zone, you might be able to grab a nice cheeky extra sell here.
Within there are now below break even. The labor differential from the conference board, that's now starting to roll over.
If you look on Akanashi, now you get the sell signal, and again the RSI is lagging compared to traditional price action. It's good to compare the two, and you can see the difference.
There's more, but I'll just say this one last thing. The cherry on top of all that is volume and spending is slowing. I mean, I don't know what more people need to see to understand that actually things are squishier than is appreciated.
Tom, on the same page with you is David Rosenberg, who partitions inflation like you do wage growth. And David Rosenberg publishes this morning that housing is approaching what he calls a tailspin. Is the ginormous shock of the end of the year, which is the housing microdynamics fold over to rent dynamics, which flat or even stabilize?
Yeah, so look, I think it's really easy to say that housing is in a recession right now. I mean, I don't think that's a heroic call in any way. I think most people probably appreciate that, or many people I think are growing to appreciate that. I think prices are going to start to fall, outright decline. I think that could actually happen again even before we get to the end of the year. These things take time, though. I mean, it's funny. I sort of been chuckling. I guess macro is such in focus, and maybe these are conversations that we should have been having with people over the couple of decades that I've been doing this. These things take time to develop. If it's already in front of
some
you,
critical
right, like
cable, our
everything I'm
cable
talking about
traders,
is
and
so
cable there also sold
housing's
off.
falling into recession, the consumer's already slowing, then it's too late.
Dollar,
right? Like, it's
as
like,
we
you
know,
have no
goes
lead
stronger
there's no lead
on
there. I
that
mean,
good
we're talking about
news.
things that take time to
Shares
develop.
drop.
And
Always the
it's
way,
pretty
always the
clear to us that we're
correlation.
moving
So
in
this
that
is the
direction.
drop
Things are slowing
on that
more
news
meaningfully
event.
than is appreciated.
Some of these things, though, Tom,
At
are
the
the objective.
top here,
The objective. And I wonder when we get to that
fake
more
out,
problematic
and then the
phase.
sell.
And I just wonder how
And
high
again,
the
I
hurdle
don't
is,
trade
not for
pound
this Fed
dollar
to
on the
cut,
news
but
events.
for
You know
this
what I mean?
Fed
It's
to pause.
dangerous. With spreads and
Jonathan, I
commissions and
agree with
stuff,
that.
you never
I
really
think
make
that
enough. It really wants to be
real
a
risk here,
solid
look,
trade
we have
like we
our
took
view, right?
here.
Our view is that the Fed basically
So we'll
stops,
wait for this to
by
hit
May.
our
It
line
basically
here
gets
before we look at
350
taking
and the
a
hiking cycle is
trade.
gonna be done.
This is our cable
But
line, so
I
the
think the
setup
real
is
risk,
nice. That's all
and
good.
let me be clear, I think that's absolutely the right move.
Saved
We have
that. Oil.
policy into, so you have some
Oil, we could have gone in
territory,
again. So
let that
oil, look, we had an
marinate,
indecision candle,
we'll be in
and
fine
then
shape
it
next
carried
year,
on with the
relatively
sell.
much. It
So
makes
that was a
things go
good.
slow. But
Again,
the
I
real
would have held
risk
that
is
if we
that
hadn't been
the
around a
Fed
news
does
event.
not unhitch
And
the
this is what you got to do as a
from,
trader. Like I say, keep
inflation,
telling people is
particularly
don't just
headline
blindly
prices, and that they just
follow
keep on going.
indicators and charts.
I
You've
think
got to
you guys are
take
going to Jackson
into
Hole, by the way, just to
consideration
support that I'm not speaking
the
to you, Jackson Hole. I was
news,
hoping to see
be
a
it,
bear
be it
rolling
the
in.
economic calendar
I think
news,
the one thing
or
that people
like they're
need to
talking about the world news and Jackson Hole and everything else. You've got to have that all into mind, because otherwise you won't know why the market's moving in a specific direction.
They're a lot in Wall Street too.
I'll have you up for drinks one day, Tom. We'll talk about bears. So I think
you
the
got
one
my
thing that's-
attention.
So
I think the
US30
one
now
thing
dropping
that
again.
is
Look,
really compelling, and the thing that I think we really need to hold the Fed's their feet to the fire on is, what do they really want to
Look at
see
that drop
from
on
inflation? Because
cable.
if you're
Great
waiting
stuff.
for inflation to get to 2%, this is going to funds are going to be meaningfully higher than anyone appreciates.
too late for me to
That's
enter.
what they're
Don't
going
want to take
do.
that
I think
risk.
that they
We're
know
right
better
down the
than that. I think
bottom.
they just
We're
need to
hitting
sort of sell
our
that
support
narrative.
zone here.
But I think if I'm wrong, and they actually keep on hiking rates, the hiking cycle will go on for meaningfully
We're at
longer than anyone appreciates,
117,
and the
so
recession
we're
will be
waiting for a
meaningfully longer
bounce
than
back
anyone
probably on
appreciates.
Tom,
this.
great to catch up. Tom
Let's wait
Porcelli,
for a
RBC
buy
Capital
later
Markets.
on.
Welcome
You know,
back
we're going to be
anytime.
looking.
Tom Porcelli
The
there.
lower
I've
that
been looking
goes, the
forward to
more I
promoting
want it
this all
to
morning.
be a buy
Coming up
back
on
to
the open
there.
as we
You know.
take you down to the opening bell. Bob Michael of JP Morgan Asset Management, together with Mike Wilson of Morgan Stanley. So we'll speak to them for about 30 minutes, and then we'll catch up with Judy Beale of Kane Anderson Rudnick around the opening bout. Just a brilliant lineup, TK, going into the opening bout this Wednesday morning.
That's good, and I think we saw the polarity there, John, of Andrew Hollenhorst as compared to Tom Porcelli. Remarkable.
And I think Mike Wilson's going to have some different opinions to the analysts that you mentioned, Tom, about 10 minutes ago.
We will see that. It will be more than interesting. Kolanovich publishes, and of course we'll listen from Michael Wilson with John Farrow.
I'll see you at LaGuardia, TK. I'm gone. See you in a bit.
Oh, are you with me?
I'll be with you.
I didn't know
I think
they
you're
allowed
leaving a
us to
little
do
bit
that.
earlier than me, but I'll see you.
Anthony from Sparta emailed me. Maybe he wants me to get on a different plane.
Just to change things a bit. We'll see.
We'll have to see. Right now, we're going to continue. We're coming to you commercial-free this half hour. Douglas Cass scheduled to join us on the death of Julian Robertson. But right now, an important essay by Sri Natarajan and Julie Serene on Goldman Sachs. And Sri, I'm going to cut to the force of your essay on consumer banking at Goldman Sachs. Is it Marcus by David Solomon? How much
Watching
is their
oil.
leader
Is it going to break that
attached to this
618?
consumer
Are we going
project?
down lower?
Well, he's certainly about to stay the course, and this is a
RSI is into that 32. It's not into an oversold position yet, so that's good.
Execution of this strategy. Since inception, we're talking about losses set to hit more than $4 billion through the end of this year. That is effectively a giant money-losing startup inside the bank, subsidized by its more.
Let's see if it's going to be any kind of micro pullback, and then we'll enter more sales.
As you don't see a
Yeah, there's the pullback. Look at that, off that 618.
Start to wear thin, and you are starting to see that inside the firm. And the latest example of this is another possible delay with the launch of the checking account, which has been delayed for over a year anyway, and just one of a series of issues that the unit has been hit by in recent months.
Sri, the heart and soul of this, in any number of books, Goldman Sachs has always been a ferment of partnership debate. Is everyone on the same page here, or is this a heated debate within the firm?
No, absolutely not.
Let's watch US30 as well.
Everyone inside the firm is on the same page with respect
See if
to
this is going to push
when
down
you
any
have a
further.
unit, when you have this new project that's lost so much money, questions will be asked like, is the lagging stock prices, the fact that they've not really been made a jump with respect to Dark Travels, Morgan Stanley, or even JP Morgan for that matter, because of the fact that they were too reliant on their core Wall Street activities that have always been discounted by shareholders? Or is there some reason for us to look at projects like this where you're losing a lot of money, where you don't have the expertise?
Let's see that
and
382 break really.
a bit longer to get to the David Solomon I told you so moment.
Sri, let's take a step back for a second. Goldman Sachs made a very public foray into the consumer banking sector for years.
See if we can get
a lot of people were wondering how
$10
it would really
or so.
transform the bank. Now there is a pause.
Yay, we did. We got two 10-pip wins on that. We got another nearly $30. Two positions I took on that US30. Went in on the sell once RSI was in that zone. So 2 more trades, 2 more wins. Just post that into the group.
Even in this whole unit buy this year, that's not happening. Doesn't even look like that's going to happen next year.
10 pips, that's the way to go. 10 pips at a time. That's how you scalp the market. Always get concerned when price comes down to that 0.500 on the fib. So, and again, this is all the moves still from the durable goods. So expect to bounce back at some point. By the moment, we're into that golden zone. So we've scalped that nice for a couple of extra bonus trades. Let's just see oil as well. And oil, yes, we just got another $15 on oil. Just scalp that little pullback. I bought as the wick pulled up, I sold there, and we just got this little bit here. Again, it's on the 618, so again, I just want to be careful. But we've got another £10, which is about another $14 or so, $13. So that will do. These are all bonus scalps. All add up.
Built out of an ambition that came at the wrong time and executed poorly, or are you saying that this
cheeky little trades, as I call them, just in and out.
Other big investment banks?
We can hold, but like I say, I really usually trade oil later on. It's breaking 618. Let's see if it's dropping more now. Let's just see a pullback.
Happy with the increasing net interest income. They can adjust their tools and pull different levers to make sure that no one issue is going to stand out as a big hurdle. For Goldman, that is not necessarily the case. It is very much a show me story right now.
I see that wick up.
There is so much scrutiny and so much focus on where costs are going in that business. I think they feel the pressure to need to thread the needle and execute perfectly here.
Sri, you and Jenny, very quickly here, you and Jenny kill it at the bottom of this essay in talking about it takes $500 to acquire an account, and even with that they lose 15% of their accounts per year. Why do they want to do this? Why do they want to compete with Fortress Diamond or Fortress Moynihan?
Brilliant, yay, and we've got another $30 on that oil drop. Beautiful. I was in, took 2 positions, and we got £20 40p, which is about $30, so that will do nicely. And let's post those again into the group. I love oil, I love scalping oil. Always, when oil, because of the spreads and stuff and everything, you're always going to be in red when you enter the trade. So that's what you've got to get over. So many people go, oh, every time I enter a trade it goes against me straight away. They don't understand the commissions, the spreads, slippage. So just once you get used to that, you just be confident in your strategy, it comes good. But it's getting over that fear.
That cost can quickly ramp up, and that is one of the reasons why.
So that's nice.
In there and sitting and praying and thinking these things over right now.
Sri, thank you so much, and congratulations on driving this story forward. Sri Natarajan, Jenny Serene there with an important essay on Goldman Sachs. Lisa, very quickly here before we get to Doug Cass.
So we've done some nice pre-market trading there. Like I said, I could go again. Maybe I could on this. 50 seconds left. Let's see if it pulls back. This is what you've got to watch out for, you see. If you're sitting on that 618,
area to
pulling
determine
back.
investment banking also is
Everything else
struggling.
is looking
Capital markets
in the right
activity
direction,
falling
but
really raises a lot of
you've got this candle
questions
to
about what the
end
fortunes of Wall Street are going to be like.
not sat on the 618, so I did well to get in there and get out of that trade.
The rising rate environment and why banks may or may not benefit on the other end.
I wanted to talk to one
So I can
person.
just post on my trades so far.
On Julian Robertson, one person yesterday I wanted to talk to.
Call this
Cass at Kidder Peabody a million years ago.
Market
Julian Robertson, out of the Navy, out of Chapel
Scalping
Hill, said, I'm going to go to Kidder Peabody, and he was restless. Doug Cass, how restless was the giant those many years ago?
Well, let me explain my relationship with him, Tom and Lisa.
There you go. Now it's pushing back down again. Wants to come lower. 94.60 is the target.
And my first job on Wall Street was at 10 Hanover Square as a housing analyst at Kidder Peabody and Company. And now Julian had a small office just like me. Actually, it was right next to me. He was working out of the New York City office of Webster Management, which was the investment management arm of Kidder, which was run out of Boston and headed by a guy, Gerald Curtis. Working with him in New York City were two young kids about my age, Tom Dean and Thorpe McKenzie, and an older marketing guy, at least he seemed older, maybe he was 28 years old, Alan Fleming, whose son Peter would team up with John McEnroe.
So good. We've got 10 minutes until we're 30 minutes away from the open, so I can make a coffee.
5 times a day. I really wanted to manage
We're doing
money
well
ultimately.
so far, and there's the break. There's that target 94.60 hit on oil as well, pushing down lower.
Sponsored me for admission to the Princeton Club of New York a year after we met. I also remember in the beginning he forgot my name all the time.
He forgot my name.
Going to go down to 786 maybe.
Tiger. And I would later find out that he called everyone.
Let's watch.
He forgot their names Tiger, and for that reason he named his hedge fund Tiger Management. But I have one interesting analytical conversation with him that I don't want to miss. I was a Kidder for a year or so, which is sort of time, and I'm going to frame his analytical intensity. At the time, I was Kidder's housing analyst, and I wrote an extensive 75-page industry review on a very hot group in the market, the mobile home and recreational vehicle industry. And not surprisingly, Tom, I was negative on the group and recommending short sale. Anyway, Julian's group owned the stocks, Champion Home Builders, Skyline, Redmond, and Fleetwood Enterprises. And I vividly remember his intensity. He would bring in sandwiches for lunch, would uninvited plop them in my office during that period, and have his analysts and 2 other sell-side analysts grill me. They were bullish to debate me continuously. And he ended up selling the stocks on my advice, and the stocks plummeted with Redmond and Champion almost filing back. I think Champion filed bankruptcy, but from there on he respected me and he remembered my name, Dougie.
So much of it, Doug Cass, is about what Sebastian Mallaby wrote about. It's about the charity of he and Josie and everything he did for New York. Doug, how did he get from the office next to you to what Sebastian Mallaby wrote about in that book? How did he make the jump to something called a hedge fund?
That's a great question. I think the key to his success, and it's something Stanley Druckenmiller always reminds me and others of. Mae West had this line, she used to say, too much of a good thing can be wonderful. Julian made big bets.
There it is, got back on that pullback.
And exhaustive analysis and research.
RSI still 29, still not oversold yet, looking good.
He believed in his analysis, put his money where his mouth was. And of course he was had this uncommon ability to find talent. But like all of us, he wasn't perfect. A good example was Bill Huang, one of his disciples who famously blew up Archegos. So that was a blemish.
Well, let's get Lisa Bramwitz in here. Lisa?
Well, Doug, I'm just thinking about the legacy of
again, price pulling back.
Many ways
this is again where we'll probably put another short in.
Doug,
it's looking good.
Legacy, in addition to all his
Let's look at US30. Yeah, US30, look, see, bounced off the 382. This is a good example to show you how to use the fib, you see, how to be careful of zones. Once it gets to the zeros, the extension, or the 1, you know it can extend out, but price likes to retest 382, 5, 618, 786, this kind of center zone. So this is where you've got to be careful of taking profit, such as here, look, 500 bounces, 382, hasn't tried to break it, didn't. We're a red cloud, still a sell signal, still red. So, but again, while it's sat on this support, we just want to wait. 30 seconds left and see if it pushes below.
Right. Doug, we're out of time. Doug Cass, thank you so much from Seabreeze Partners. Greatly appreciate that. Lisa, we've got to get set here for tomorrow as well. It's not. This is an unusual.
Yeah, if you see a buy signal flash, then you know the whole thing is changing. But at the moment, it's not. It's just a temporary pullback. We're still under the moving average cloud as well. But I don't want to be taking a sell position yet, just in case.
To support an economy in the traditional ways, i.e., through a stronger currency. You could see that right now we're seeing the euro continue to deteriorate well below parity. How much does this create a real friction at Jackson Hole with the likes Andrew Bailey, obviously, with the pound also falling out of bed, but also Schnabel of the ECB speaking as well.
Yeah, I wish Lagarde was going to be there, but that'll be interesting to see Schnabel as well. Lisa, what I would suggest is FX is a litmus paper of the international system. It's something that Chairman Powell has to watch every tick of the way. Even
there you go. Price tried to enter into the cloud, didn't.
That I think will be really compelling.
So now it's pulling back.
We've heard a lot about that this show and the disagreement about how high the Fed funds rate has to go to really become in balance.
Got a chance of 10 pips.
Rate, the headline shows around 8.5%. Right? Is it okay to just go to 3.5% and stay there? Can they stay there in good conscience if they're looking at inflation that is much stickier?
Just wait and see. So we've got 5 minutes to go till 30 minutes out from the open. So.
In your world, it was the spreads coming in on bonds. I mean,
and then we've got the pending home sales. See what happens into this.
That's out there that so many people feel.
Well, this is one thing that's been supporting
Cables
the equity
pulled
market
back off
because
that
you're not seeing that
zero line
and if credit's a leading
Fibonacci.
Indicator, it's not really indicating significant pain. There are a lot of issues with this, right? The cash flow, etc. How do you forecast a recession at a time when you're not seeing it in the anecdotal data? And that has been something that's been challenging for investors throughout the year.
We are off to Wyoming. We hope you'll join us here in the next coming days. Just a wonderful set of guests, all led by Michael McKee and his effort in the academic part of Jackson Hole, and of course with his careful analysis of the chairman's speech Friday morning with a 2-hour time delay. Lisa warned me on the break that I have to get up early, which I didn't.
Yeah, so maybe we'll hopefully get you, depending on whether we can get you out of the grill. What's it called again?
In the Bear-Proof hotel room. Red and green on the screen right now. Yield a little bit higher yield, just 3.34% on the 2-year yield is of north. We will see you in Wyoming tomorrow.
So no buy signal yet on cable. And so is US30 still just doing a little bit of a range now as it does. We'll see if we get this move in 3 minutes time, any kind of move. If it finishes into our cloud, then if you were in a sell, that's where you would end the trade if you've not already taken some preset profit. On our Hacking Ashy chart, you see still just a slight pullback of that 3.82 fib level.
Material samples brought back from objects in space can shed light on billions of years of our solar system's history, including details about the origin of life here on Earth.
A piece of an asteroid is a piece of the earliest beginnings of the solar system.
But picking up rocks from the surface of an asteroid or planetary satellite isn't as easy as it sounds. It requires voyages of millions of miles to bodies that have never been seen up close. Probes need to land on surfaces with weak gravitational pulls, where the surface terrain is completely unknown. Gather samples and then make.
Didn't like the 618.
And while behemoths like NASA and SpaceX grab headlines, it's
but we're still in a downtrend. Just wait for RSI, see if it curls down.
Better known as
Tempted to go in again, but I say we're only 30 minutes out from the open, so I don't want to risk, because this will move again, this will shift. You can see it's kind of just some small moves. The bigger move was earlier on, and we'll get a big move again on oil. Look at that push down. Yeah, it was right to sell, you see.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
Can zoom right in on that. Look at that reverse hammer. So we should have sold at that peak. 786 is your level of TP. Yeah, perfect. There you go. Look at that. Oh, what a move. Damn. Beautiful. Right on two. Look at that. 30 minutes. There's your pre-market move manipulation that I go on about. Always 30 minutes out. Look at that. What a drop. Now pull back. Pound dollar didn't really do anything, but oil. Wow. US30 didn't. Just shows you. There you go. 30 minutes out, and they're the moves you get. Almost like an open. Pre-market trading. RSI is now in the oversold zone.
Live from New York City this
We're broken
morning.
with the extension, so we need to wait.
Worldwide, 3 days of losses into Wednesday. Equity futures slightly positive. The countdown to the open starts right now.
Here we go. The countdown to the open.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, the Open, with Jonathan Farrow.
From New York, we begin with the big issue. Markets on edge ahead of Jackson Hole.
Heading into Jackson Hole,
overall positioning has still been pretty depressed.
You have a slower global GDP.
There's the push up. Push back now.
We are still
bottomed out this level of support. Great drop from that manipulation 30 minutes out. It's worth watching every day. Should have got in for the sell, but like I said, I've not tried it before, so I just wanted to see how it moved, and you can see there's a massive move as if there was some kind of major news event, which obviously there wasn't. It was just like 30 minutes out from the open. Bang. What a sell-off.
There is a lot of anticipation for Jackson Hole.
All lives right now are going to be on Jay Powell and the commentary at the Federal Reserve meeting in Jackson Hole.
Joining us now to discuss JP Morgan's Bob Michael and Morgan Stanley's Mike Wilson. Bob, I want to start with you. It's not a pre-market therapy session, but I'm told you've got worries, hopes and wishes. Tell me about them.
Yeah, hi, John. I do. I worry that at Jackson Hole, Powell will state the obvious, that their battle is against inflation. It may bring recession, and ultimately the thought about a pivot to cutting rates at the back end of next year is sheer fantasy. What I hope for at a minimum is that he gives us some metrics about what would it be that would cause them to pause rate hikes and what would cause them to actually start to cut rates. And I think it's some combination of core inflation metrics and unemployment. What I think the Fed should be doing, and Powell in particular, is taking the central bank lead on this and make it his moment. For God's sakes, we're facing the highest inflation in 40 years. We're seeing the most aggressive global central bank policy response in that 40 years. We're seeing rate hikes nobody ever imagined. We're going to see a liquidity withdrawal from quantitative tightening that we've never experienced before, and it's going to be painful for households and businesses. But I think he needs to lay out exactly why that's necessary and the evils of inflation becoming entrenched. I don't know that he'll go there, but he should.
And we've got to work out what it means for this market. Mike Wilson, your words. With the Fed still very much in the picture and earnings estimates likely to fall further, equity markets are almost as unattractive as they were at the beginning of the year. Mike, do you still hold that view?
Yeah, we just wrote that one, so I'm definitely in that camp right now.
You know, the old fire and ice narrative is coming back into play, John, because I mean, the Fed's job is incomplete, as Bob laid out, and the Fed
Cable
knows that.
ranging
So
at the bottom, just where we need it to be before we take a trade. Oil pulling back from that sell-off that we saw.
Fed pivot is this time they're not going to, unless something really
30 seconds left of this candle. Let's just see.
So I just
see if we
think
get a
that,
buy
you know,
signal.
15 years of excessive monetary policy has, you know, made the average investor sort of complacent around this, you know, reality. But the second part of our narrative, you know, the ICE portion, is really where we think we have a more differentiated view. I would say most investors we speak to around the Fed
10 seconds
are
left.
realistic. They know they're not cutting rates anytime soon. Maybe the bond market's pricing that early next year. I don't know. But that hasn't been a great predictor anyways. So most investors, I think, are realistic about the Fed and inflation. That's why multiples went down 30%, you know, between January and May. And look, what they're not realistic about.
There you go. Now the drop again. You see, so it wasn't just a little fake out, maybe. Let's see, it sat on 786.
And I say that with confidence because most investors missed the positive operating leverage on the upside. And so it's just a mirror image of that. You know, inflation now is coming through the cost channel faster than it is at the endpoint channel. That doesn't mean inflation is going away at the endpoint. It just means that costs are increasing faster, which means
beautiful push down again on oil. Look at that. It's going to hit that. It's going to break and hit that extension level back to the support. $94.
That's how it works.
Is it going to reach?
We're not into that phase yet. That's the next step that probably begins in the third quarter and the fourth quarter of earnings season. Which will, you know, these companies are going to have to admit that the negative operating leverage is much worse than what people are modeling today.
Mike, how frame this for us then? Just how strong is your conviction that earnings expectations are still too high?
Extremely high. I mean, my conviction level is high on that. It's similar to my conviction level on the Fed in December, which was that people were underestimating where the Fed was going to have to go, and that's why multiples are going to come down. And so our focus, as you know, John,
bounce back. Look at that.
You know, really in April is when we.
Is it going to fill that wick? Let's watch, see if it pushes down.
Inflation, more to the slowdown that was now upon us. And I think we timed that pretty well. What happened is in June, the consensus started to share that view, particularly on the buy side. And so stocks and bonds priced both, right? We got the rates at 3.5 on a 10-year. We got, which the multiples, you know, really got clobbered. And we got, you know, the buy side and even companies and analysts on the sell side starting to get more realistic about earnings estimate cuts. And we saw that in the data, right? So the earnings revision breadth is one of the worst readings we've ever seen. But remember, that's a breadth measure, which is just number of cuts versus number of hikes in terms of earnings estimates. It says nothing about the magnitude. And in our experience, it usually takes 3 to 4 quarters for the earnings cuts to be finished, and the market typically bottoms somewhere in the middle of that process. So we're in early days on the earnings revisions in terms of the magnitude of the cuts that are coming in our view. So we'd say at a minimum, forward estimates are probably 5% too high still for next year. And if it's a recession, it's probably more like 15.
Bob, you've said there's a price to pay. I know you agree to some degree here, a price to pay to get CPI down. What is the price we've got to pay in the economy?
Well, I think we need rates to go substantially higher. I was on vacation for the last couple weeks. When I came back, I thought, the bond market looks mighty expensive and looks pretty placid as well. Is it accurately pricing in the amount of inflation we're going to see over the next 6 to 12 months and where central bank policy has to go? And you're starting to now see that in Europe, although I think the US market is still a little bit calmer. I think, again, this is why Powell needs to use Jackson Hole to lay out the case very clearly that, yes, there are a lot of things in the supply chain, there are a lot of things about commodity prices they can't control. What they can control is to make the cost of financing higher prices punitive. So you have to think twice before you buy that next car or that next home or put stuff on your credit card. And those are some of the tough decisions that are ahead for us.
Some tough decisions for Chairman Powell as well. Maybe we got an
1 minute 25 to go on this candle.
President Neil Kashkari.
RSI and the average both below neutral. Is going to push down again, so we're close to the open. 20 minutes to go to the open.
On making sure we're getting inflation down, and only relax when we see
US30 in a range, last 4 or 5 candles. Look, as we know, before the open.
Out of Jackson Hole, Wyoming, we can get over to Mike McKee.
So let's put
Morning, John. Well, the Fed just called. They want to talk to Bob Michael about becoming a speechwriter for Jay Powell, because essentially what Bob just described is kind of the message Jay Powell wants to give, that the Fed is going to
Mark
tighten
out the area
and
for the
get to the point
breakout.
where they are restrictive, but he won't call it punitive. I'm sorry, Bob. He won't be as
So I
direct
can set
as
some
you.
levels.
But he does want to
So
make the
including the
markets
wick. So
understand
this is that
this
fib
what they're going to do.
05.
Now, how far they go is an open question. You look at the
kind of up
data;
here.
it's very mixed. This
So
morning
I've got
we
some
a durable
indication
goods
of a bit
orders
of a.
report that came in
Got
lower
to take
than
into consideration that
expected. Capital
durable
orders,
goods.
the
So
important one, rising, but not by
I've set
all
some
that
levels
much.
there, waiting
And then,
for the
what you're
open.
seeing is mixed messages about the economy in July. Very strong numbers in manufacturing, but then when you get to August, those S&P PMIs yesterday really undercut manufacturing and services. It's a different kind of story. So which side is the Fed to believe? Did we fall off a cliff in August? We will get some data before we get to Jay Powell. We had the durable goods today. Tomorrow we get second quarter GDP revisions, which will be interesting to see if we see them revised higher, and that's kind of the expectation. Also, we get jobless claims, and then Friday the big one is spending and incomes and PCE, the Fed's favorite inflation measure. We'll see if there's any relief in that in the same way we saw some relief in the CPI and PPI. If that's the case, it just makes Jay Powell's job a little harder, because you've got Mike Wilson and Bob Michael there saying that, you know, the Fed needs to be tough on this, but there are going to be people who say we're going to go into recession and the Fed needs to look at cutting rates and lay out a path to do so.
Mike McKee, where's the hat? I thought we were getting the hat this time around.
Oh. All right.
There we go. There we go.
There
now I'm coming to Jackson Hole, Wyoming a little bit
Kevin
later
Costner.
to join Mike McKee. Very close to that kind of vibe.
And we're going to take you hat shopping.
Maybe. Might give that a miss. Take TK instead. Mike McKee will be driving forward the coverage for us Thursday and Friday. Fantastic lineup of guests for you. A range of Fed presidents from Esther
Going to be
George,
good.
Patrick Harker, James Bullard,
And again,
Bill
over a lot of people
and Raphael
won't trade,
as well.
or they'll
Bob
be
Michael,
straight
Mike
in on
Wilson
it
back with
once
us.
markets
Mike,
start
you know
moving.
what
So
the
you just got to
bulls
be
are thinking
careful
about
of
the
that.
equity market.
So over the economic calendar, you can see here,
So to speak. How high do
2
you think the hurdle
days,
is?
Friday, Saturday, sorry, Thursday, Friday,
Well, I
and
think
done.
it's one of two things.
Like I say, we're going to look at the jobless, continuing jobless claims on Thursday, and then for Fridays, they just said it's the PCE and the personal income. Then our favourite Michigan consumer sentiment to trade as well. So more pips to get. Pending homes is our last trade of the day. If we get the result we want. Looking to be pending homes actually up from -8 to -4. But on the year from -20 to -22, so a bit of a mixed bag. So again, we'll wait for the result and see.
They don't want to drive us into a deep recession.
Moment cables looking at a buy. Oil did push back down again.
That would be maybe
Going to leave oil alone now until after the open. We've got the
problem with that narrative for equity investors, John, is that's not going to be good.
EIA
it's not going to be good
news coming up as well. We'll just put
And
it
my
on the
biggest
chart.
concern in the last 3 weeks is that, you know, we've gone from 15.5 times earnings on a forward basis, which has always been our target multiple, but that was before earnings got cut. And now we're back to 18 times. So the price is just wrong. So that's why I say in the
news coming up
week and
right here.
our podcast that, you know,
Let's mark it
basically
out
the
so
price
we
is
know.
wrong and the earnings are wrong again, which means the attractiveness, the risk reward today could be almost as bad as it was back in January in that regard.
It's a big call,
Post
Mike. I
it to the
enjoyed
group.
the note. Bob Michael, you look at the Fed and you see the big distinction next year. Next year, 2023, the divide between a market that hears rate cuts and a Federal Reserve that's not talking about anything but hikes.
Yeah, that's true, John. And I feel if I'm wrong, it's because the Fed's going to have to go much higher than 4%. What doesn't get talked about a lot is there's still a lot
So
of
no
labor
trades, we're just
shortages
waiting for the open
everywhere.
now. 15 minutes to go.
You look at fire
I'm
departments
just going
trying to attract
stick a
workers.
quick coffee on, be back in a second. We'll keep the stream running.
There's a lot going on outside of retail where there's a shortage of workers, and you do have the millennials coming through and they're looking for housing, and there's a shortage of that. So yeah, I feel that this first round of rate hikes by the Fed has slowed things down, but it hasn't actually killed the economy just yet. And I know real GDP is negative, but nominal GDP is still running along at a pretty good clip. So my fear is Not that the Fed gets to the 3.75% that the market has priced in and then pauses. Forget about rate cuts. I think that's a fantasy. But actually, unemployment is still low, that there is a wage price spiral that's become embedded, and they've got to lean further into it, regardless of where GDP is.
Well, Mike Wilson, sticking with us. Equity futures right now unchanged on the S&P 500, about 17 minutes away from the opening bell. Let's get you some movers. Here's Abby.
John, well, let's talk about the health of the U.S. consumer, because we have lots of different reads on consumer spending. Starting off with the shares of Nordstrom, they are plunging this after the luxury retailer cut its outlook, basically on weakness at the rack. That, of course, is their discount arm. Lots of inventory there, so they're having to discount. Plus, they saw a big drop-off in traffic and demand in July. Let's see whether or not that continues. Toll Brothers, a similar story, down 2.8%. This is the high-end luxury builder. Home orders sink 60%. They cut the sales outlook, and rising rates hitting even those high-end home buyers. So another negative tell on the consumer. On the other hand, Lazy Boy, this is interesting, up 7%. They put up a great quarter. They beat sales by 7%, earnings by 35%, and they're actually holding high prices. So you have demand for those pre-made goods. There is also an 8% short interest, so a bit of a squeeze. And then Peloton, up 9.3%. They are doing what they said they weren't going to do. They're now selling some of their bikes and accessories on Amazon. There's a short interest there, too, so that could be a bit of a squeeze as well, John.
When times get tough, you start doing things you promised you weren't going to do. Abby, thank you. Coming up, the latest quarterly results fueling some concerns about the state of the economy.
Inflation is a cloud over the consumer for most consumers. Unemployment, which has been great, is starting to
Hey, if you're a UK parent and don't have life insurance, then check this out. The site I'm going to share with you right now will lock in your cheapest price for coverage for your family for the next 20 years. There's no medical exam required to get the exact price either. It's easy. You'll get a quote for up to £300,000, and all you have to do is pop over to this quiz I'm going to show you right.
Show signs of a bit of a downturn as layoffs are being announced.
That conversation up next.
There's more activity in the fusion world than ever, and not just in government research labs. There's also an emerging private fusion industry that's attracted billions of dollars in capital in recent years.
Governments and private investors alike realise that we've got to find a solution that's going to allow us to get to net zero targets.
This is one of the hardest but most rewarding problems that humanity could work on. Ultimately, we all want the same thing. We want someone to put electricity on the grid from a fusion power station as quickly as possible.
Frankly, the scale of the challenge, 3,000 gigawatts of fossil fuel to replace, there's not many things that can do that. In fact, there may only be fusion that can really do that.
And while many in the scientific community predict fusion power will take decades, some in the private fusion space believe we'll get there in just a few years, as soon as the 2030s.
Ken Griffin is moving both Citadel and Citadel Securities to Miami. The scoop was broken by Bloomberg's Amanda Gordon.
This week, as the world watches inflation rise, employment rebound, and fiscal policies react. All roads lead to Jackson Hole for the Kansas City Fed's 2022 Economic Policy Symposium. Bloomberg's all-star team is live as policymakers and financial insiders discuss the economic issues and solutions that keep the world's money moving. Coverage starts August 25th on Bloomberg Television and Radio.
The downdraft in consumer stock prices year-to-date in 2022 has baked in the expectations of moderation.
Inflation is a cloud over the consumer for most consumers. Unemployment, which has been great, is starting to show signs of a bit of a downturn.
There'll be more promotions, there'll be more markdowns, there'll be more goods available for off-price.
The question is just how will they be able to pivot through this holiday season.
Consumer concerns intensifying following another wave of disappointing results. Nordstrom joining a growing list of retailers cutting its profit outlook, with surging inflation weighing on demand, particularly among lower-income customers. This as Toll Brothers signal a slowdown in more affluent spenders, reporting a significant miss in orders, with rising rates squeezing wealthier Americans. Our team coverage starts right now with Abby and Taylor Riggs. Hey, Abby.
Okay, and we're back. Right, so topped our coffee up for the final half an hour scalping. 10 minutes to go to the open. Say cable is where we need it to be. Sat down. I don't want to push too high and keep it inside this supply demand zone here. Look, which is good. And then I push up. Oil, we'll look at that later as we trade the EIA news. And we've got the NY Open coming.
And that rack segment, John, doing really very poorly.
Abby, thank you. Taylor, Toll
And
Brothers.
we're going to do the pending homes.
Similar story, John, though maybe hard to be surprised here. We've talked a lot about sort of the home market, the sensitivity to rising rates rolling over. Toll Brothers, of course, one of the, as Abigail was saying in the last segment, luxury home builder also showing some signs of slowing. You see that in the price action that you mentioned. And also take a look at the right-hand side of the screen there. When you think about some of the fewest orders that they've now got since about 2016, a cancellation rate that rises up to about 13%
Which is
as well.
on the chart here, we can see it's 38 minutes away.
Property crash in the great financial crisis.
And then we're done again for the day.
That's when you start to roll over and get a little nervous.
Taylor, problematic, although expected for a lot of people and largely anticipated. Abby and Taylor there on the latest here. Bob Michael, Mike Wilson back with us. Bob Michael, I've got to ask you this on credit spreads. Have we seen the whiter this year, do you think? You told me last time maybe we have. What do you think now?
Yeah, we were 600 over in high yield, and we got as low as 425. I got to tell you, I'm looking now at credit spreads in the mid 400s, and they just look too expensive to me. They don't seem to adequately price in recession.
No more signals have appeared either, but we've got a first show green look on our trend bar. So it's going to be interesting on cable.
And then I think as we get into
don't want to be buying just yet. Want it to hold before the open.
Into recession, maybe even sooner. We're going to go higher than that, maybe as wide as 750 over.
Oh wow, Bob, you think things can get that bad next year?
I do. I think you're already seeing the slowdown in the economy. I think it's more of
we'll get
a
rid of this
pause,
line
and
so we can
we'll
see the action.
Acceleration again in consumption and housing and things like that, just because unemployment is so low. But I think that forces the Fed to become more aggressive.
Stagflation, reduced credit.
Is adequately pricing in quantitative tightening. That hits in full force next month. And I want to see a couple months of that and see what the appetite for the market to digest bonds when they're coming out of the Fed left, right, and center.
You're not alone. I mean, I can't believe it's not a bigger part of the conversation as so many conversations I have. Mike, we've got to talk about what this means for the equity market. Can you help me understand how rare it would be to have a 50% retracement of the sell-off of this year and then go back and retest the lows in the middle of June? How rare would that be, Mike?
Well, you know, these studies are designed to, you know, convince folks of, well, this is the way it's going to be. And I think some of those studies are valid. Some of those studies are, you know, suspect. And this is, you know, a good example. You know, any statistician would say, you know, n equals 10 is probably not valid. That's number one. Number two, how you classify the sell-off. So it has to be quote unquote 20% sell-off, then a 50% retracement, and that's the qualification. But there have been many sell-offs that have been at 15, 16, 17%, rally back more than 50%, and then get absolutely wiped out. So, I don't put a lot of credence in those types of things. All we can do, John, is look at the setup fundamentally. Okay, we look at technicals, by the way, quite a bit. And on that note, I would suggest strongly that, probably the most important thing is we could not get above the 200-day moving average, which is downward sloping. Okay, the 200-day moving average is relevant because it is the trend. So we're in a downtrend. And until the market can get back above that downtrend, I think to be making some, grandiose call about new highs is quite frankly, it's irresponsible given what's going on with the Fed and QT coming, as Bob laid out. It's going to be a lot worse than people have experienced so far. And you have this, earnings picture, which is decidedly pointing lower. So once again, as you know, John, we run our, book on risk reward.
Yep.
And the risk reward at 4,200 is poor. The risk reward at 3,600 was actually pretty good. We didn't think we'd get to 4,350. We did think you could rally maybe back to
interesting. Get that 200 moving day average on your chart. That's the one you see. That's the main indicator the pro traders use.
Act as fiduciaries and illustrate where the risk reward is good and when it's not good.
Well, I have to say, it was nice to see Morgan Stanley on the same page as JP Morgan for once, except it was JP Morgan Asset Management this time around. But Michael and Mike Wilson, to the two of you.
Shaping the future of trading.
Okay, we're 5 minutes away from the open.
Brilliant. Not very constructive going forward. Up next, your morning calls.
Got the morning calls for stocks if you're into that. We're watching, yes, so nice. Cable just nicely spiking. Look at that, some wicking going on there. Crazy indecision. Is it going to be a big blowout? Are we coming lower? Retesting 117,456. We want it to get back to that 117.90. Would be nice. Yeah, if this pushes lower, I'm more excited about taking the buys. So US30 in a nice flat spin, basically just a range. We're looking for sales. Trend bar's red, RSI's red. If it breaks this breakout zone, we're coming down lower. We will see. 6186 area is a potential, or is it going to go reverse manipulation, hit the 236 and drop? We know we love trading the manipulation, so let's get ready. So you can say you can trade the NAS on the open, people trade gold on the open. There's various different things. I just, once I get an account size above a certain level, I switch to the 30. Even though it's more riskier, so bigger. We're looking again, it's 10 cents a pip value. So that's £140 margin required. Let's see if we can get some wins on this open. Let's just watch and see the price action. So this is why we don't use Hackanashi on the opens or the news. We want to see live price action correspond with our indicators. And we'll get a feel for the, it's basically been in a bit of a range. So looking for a good breakout, or is it just going to range because everyone's waiting for Jackson Hole? Let's see.
From New York, let's get you some morning calls. First up, Rosenblatt downgrading Twitter to neutral, seeing too many question marks. Raymond James downgrading Medtronic to market perform, expecting limited upside amid slowing sales. And finally, Citi cutting its Macy's price target to 21, warning that customers are likely to keep pulling back on spending. Coming up, the opening bell with Judy Beale of Kane Anderson Rundick.
cable dropping further, retesting. 17.6, $1.17. Nice. US30, look at that, no volume, just waiting like a spring, we hope. And then we'll do our final trade on the pending homes. Then it's time for some food. Gotta eat. We've had a good session, London and in this pre-market as well, so let's just see if we can get a few extra pips and get out. Got 20 seconds to go. Good luck everyone, we're logged in, make sure you're the right side. Let's see, let's just watch that price action. 10 seconds.
We have the technology, we have the lasers, we have the climbers, we have all of it. If a private entity wants to build it, or a government, they can build it. It'll change society. We have no
Here we go.
how colonizing into space, how really spreading into space will really change our society over the next 50 to 200 years. It'll be completely different.
Brilliant, took 3 positions on the sell. 10 pips, that's bagged. Let's have a look again. Let's wait. Is this going to break? Watch the RSI. Let's see if it wicks up. Looking strong again on the sell.
As you look at the company you created, how do you think you're having an impact in the world for the betterment of the world?
We are by far and away the best positioned entity to solve the question as to what
Coming
does the
back.
human genome mean and how can you apply it to individuals.
Innovation, money, and power collide in Silicon Valley and beyond. Bloomberg Technology with Emily Chang. Weekdays at 5 p.m. in New York and 2 p.m. in San Francisco.
This is a market that over the past few weeks has made it clear it
Okay,
wants to go
let's watch
higher.
this.
It got a little spooked by the idea that geopolitical tensions are rising.
Again, still waiting for the move, took some more positions on that. We're going to break even and we got $2. Okay, we're going to go again. We're still $25 up on the open. Let's wait again, it's just, you can see it just playing around.
It's your opening bound this Wednesday. Switch on the board and get to the bond market. Yields higher by 5 basis points on a 10-year, just creeping up over the last few weeks to about 3.1% now.
Now we're talking, now we've got another 3 and we've got another $10 there, that's good.
Can't really buy a day of gains at the moment.
Just selling, sell. Well, that trend board's red. Not doing anything else other than looking for sells. So we'll see if it's going to break that 05 level. You know what I mean? That's the key level.
There it is. Crude 93.80. That one's been
There's the
climbing
push down and I'm out.
last
Yes.
now flat.
Ooh, we've got 7 positions on that push down. That's what I like to see. That's the move. Just got to wait for that spring effect. There you go. There it goes. There it goes again.
Starting off with the shares of Peloton, we of course have that stock.
That's more like it.
There, so it could be a squeeze, but Peloton is now doing what they said they would not do. They are going to sell certain bikes and apparel through Amazon. Farfetch, the online luxury retailer, is acquiring a nearly 48% stake in an Italian online fashion retailer. Investors clearly like that, with that stock up 14%. But Bed Bath & Beyond up 24% on a Wall Street Journal report that they have found a bank for sourcing for private funding to help with liquidity. That was, of course, the rumors of that speculation around that possibility was what helped set off the rally just a few weeks ago. Nordstrom, on the other hand, down 16%. They, of course, cut their outlook, weakness with the lower income consumer.
There's the push down.
Segment, the inventory
Beautiful, look at that.
loaded. And John, you know, of course, this year it's so interesting because
So I usually do 2 blocks. 2 blocks of buys or sells. We did nearly 3 there, only because I screwed up. I didn't wait for the wick, so I ended up with a $1 loss and there's break even, 2 break evens, and a 43 cents within the 43 cents. Well, now we're rocking. Now we've got in the end we bagged
last month,
20.
it plunged to the lowest level since basically
So about $50. That's great. That's what we want.
We'll have a new reading in 6 days. That
And
will
we've still
be
got a
big
bigger
tell
move to
on
come
what
yet.
consumers are planning to do again with those large appliance purchases.
We're only doing the one standard, the smallest lot size, and that's what you want to be doing. So if it goes against you, you can end without a massive loss. I see I do multiple positions there. I took 10 trades basically.
Egregious deficiencies in its handling of spam bots and user information. The company's CEO pushing back in an email to employees, writing the following: "What we've seen so far is a false narrative that is riddled with
618 is where it could retrace, so watch out. Still red on the trend bar, still the signal, the valid sell signal from earlier, still valid. Didn't change, you're not seeing a buy flashing at all. We broke our breakout zone now, look.
Are now looking into this. Essentially, what Twitter's former top security official,
Look at the Hakanashi chart, you see. You'd be a little freaked out by that because you don't know if that's going to push down or not, you see. So that's why it's good on these opens to stick with live candles.
And also that Twitter is vulnerable to espionage from foreign governments. Plus, he said, as you alluded to, that Twitter prioritized growth over reducing the number of spam accounts. Now, Twitter, as you have mentioned, disputed the claims, noting that he had been fired back in January for poor performance. But this very much could have consequences for their ongoing legal battle with Elon Musk about that $44 billion deal. Because remember, Musk is trying to walk away from it for the very reason that Twitter was not forthcoming.
Gonna get a push up now, back into the zone maybe.
Which comes back to this complaint, and his lawyers yesterday already have filed to issue a subpoena to Zatko to testify in that ongoing court battle. One analyst over at Rosenblatt actually downgraded Twitter this morning, saying the complaint compels them to step back from their formerly bullish stance on the deal, opening up a new avenue for Musk to allege materially inaccurate representations by Twitter. And clearly the market not buying that this deal is ultimately going to happen, considering the shares are now trading more than $15 below that offer price of $54.20 a share. And while whatever the outcome of the deal is uncertain, there is pretty much one thing for certain, John, and that is
down. Can we get some more positions away?
Substantially. After big growth at the beginning of the pandemic, those daily active user growth numbers have really leveled off, be those human or bot accounts, John.
What does MUDGE stand for? That's
Don't
what I
know.
could think of.
It's like a hacker name.
That's a hacker name.
Yeah, he has a lot of street cred apparently.
I'm sure he does. Just wondering. All right, thanks, Kaylee. Thank you. The equity market down a tenth of 1%.
Flashing around, just waiting to see if we can clear some more
On the S&P,
sells.
On the NASDAQ 100, we're a little bit softer as well. On this day, 1 year ago, the NASDAQ Composite hit
We've got a few more sells there.
first time on record.
Another $10, $15. It's all adding up.
That's my question.
You've got street cred.
Street cred?
You've got Wall Street cred. Come on.
Okay, done. Sold. Let's talk about this. So the S&P 500 makes record highs in January of this year. Everyone talks about that. The NASDAQ, though, hasn't made a record high since last November. And as you mentioned, John, it's actually a year ago when we were getting key round numbers that we love here in the media of 15,000. We've been sort of struggling since then, as you can see. Big tech on the top has been the big underperformer within U.S. markets, though relative to the rest of the world, it's
see if we can get some more
sells
selling at the top.
When we think about allocations, this is an interesting one. Goldman out with a note saying that hedge funds have increased bets on some of the mega cap stocks.
Excellent, look at that, call that wick down, beautiful, beautiful, beautiful. Got another 5 positions in there.
Interest rate risk. We're also thinking about concentration risk as well when you take a look at that chart. What's interesting, the performances of late in the last year, of course, hasn't been great in terms of market cap, and then of course performance for some of those big cap stocks. The big thing, though, John, and I don't want to take up too much of your time, though, is that the correlations, according to Gina Martin Adams, if you go back to the 70s, equities bottomed out when inflation peaked. So for her, that's going to be a key theme when we think about can these stocks really start to rebound from here.
You're welcome to as much time as you like.
Now it's pushing up, so wait and see.
Just need all the street credit.
We're just going to go back into the zone, it's going to be another sell-off. We're still red, remember.
A little bit later. Julie Biller, Kane Anderson, Rudnick's got this
the final 2 sells
how much
there.
uncertainty there is in the economy with fears of a slowdown and a recession. I would prefer to invest in stocks with long track records, like decades, not years. Economic resilience through a cycle is more important than total addressable markets or growth or even capital allocation. Julie Bill joins us right now. Julie, I want to go to something that you've talked about on this program over the last couple of months, and that's the prospect that we're really overestimating the strength of this consumer. My colleagues at Bloomberg Business Week put out this story this morning, and here are the numbers. Some 20 million across the country, about 1 in 6 American homes right now, have fallen behind on their utility bills. That's how bad things are.
Pending homes in 20 minutes.
Can you walk me through the kind of things that you're looking at that tells
Oil
you perhaps this
is a
consumer
buy. Look,
isn't as strong,
there's
as
the buy
resilient
signal.
as many people are telling us they are?
Well, I think you can see it in the data, such as credit card data starting to creep back up. You see it in, earnings from those buy now, pay later companies, where the majority of their earnings losses are actually being driven by people just not paying for their
US30, what's it doing? Is it going to push back?
So I think you see it in a lot of different
Looks
data.
like it's going to be a nice wick down
today,
again.
Talking about the low-end consumer pulling back, and most of the focus has been on the low-end consumer, as far as because so much of their earnings right now is being taken up by rent, gas, etc. But I still worry about kind of the middle-income consumer as well, because I think that's where the job losses are really going to come. I think the front-end worker employment will stay very strong, but I worry a lot about that middle marketing executive and how
it's exactly like what DAX did, remember, exactly the same.
Julie, there's two things we're told. That's one of them. The consumer is strong. The second is, if we get a downturn, it's going to be short. It's going to be shallow.
Oil as well.
Given your belief about what is happening with the consumer right now, backed up by the data points you're looking at, what does that tell you about the character of the slowdown that might be around the corner?
I think it's really hard to know.
Push towards our final trades in 20 minutes.
Because so much of it is driven by what happens at the Fed, and what happens at the Fed is driven by inflation, and inflation is driven by a number of factors that are not just related to economic forces but geopolitical ones.
See, the buy wasn't valid really because we didn't have a break on the RSI. RSI didn't go green, so we need to wait.
Companies with durable earnings, because you just cannot predict any of this. It's better to put yourself in a position with a company that is the master of its own destiny.
Cable this to push down, so we can buy cable as well.
That's kind of how we're positioning right now.
We're
There's
waiting
two
for that.
characteristics that you pick out. One is high switching costs, and you can walk me through what you mean by that in a moment. And the second is recurring revenue. Where do you find those companies right now in this equity market, Judy, with both high switching costs and recurring revenue?
Well, typically software is where you look for a lot of these types of businesses. They typically can be mission critical software
US30 pushing back down again.
You're not going to rip out even in a difficult economic scenario. You could think of your ERP
breaking out that neutral zone, come on.
Or some of the more vertical software players. But when I think of switching costs, I think of something like a company like West Pharmaceuticals, which is a drug delivery company.
There's a cheeky
and
buy
so when
signal,
you get your
just
biologics approved by the FDA, the drug delivery mechanism is embedded in there. And so even if you find a supplier with lower costs, you're not going to switch over because you have to get the whole thing approved again by the FDA. Those are the types of businesses that kind of have really durable economic models where it's just really hard to get rid of them. Those are the ones that we're looking at right now.
They're the survivors. Let's talk about the losers. Judy, what do you avoid?
I continue to avoid a lot of consumer discretionary. I think retail,
so we did get a buy signal. You see, we could have flashed in on that. I'm waiting for the pullback
I continue
again.
to be very concerned about travel. I think the numbers coming out of airlines will be pretty positive for the summer.
Let's see if we could just scalp it down to this line here.
But I think business travel is a real
20
question
pips.
mark to me. I know when I look at my
Down
own
to our
business
breakout
travel, I'm
line.
doing so much less of it because so much can get done over Zoom now.
And we're still
I think
looking at oil.
conferences won't be the same. Business travel
Rejection
is what drives
of
a lot
our
of the
baseline.
profitability for these companies. You need to fill hotel rooms and airlines Monday to Friday, not just over the weekends.
Okay, Julie, this is really important. We've been talking about a shift in spending from goods to services, supporting some of the companies that you're saying maybe you shouldn't be in. What's happening with that transition from goods to services? Is it more than just a shift now? Is something else happening?
Well, I think, it's
Going
a lot
on
of
oil,
different
we're going
factors,
for 20
right?
pips.
It's a rebound from the pandemic where people are, could only spend their money on goods, and now they're finding they're able to spend them on services. If you have a major decline in consumer confidence, I think you'll see even business services start to pull back. People will stop going to as many restaurants as they have been going, et cetera. And I think that's just a function of whether or not people think their earnings are going to be better or worse in the coming 12 months. I think a lot of consumers are realizing that there is a major headwind in a recession coming on, and that really impacts their behavior. You see that in kind of the appliances and large durable goods being softer than we had expected.
So, Judy, where does that leave Chairman Powell this Friday?
I think it's really important to be able to talk to inflation, because I think you got early signs of that last week with different Fed commentators
Presetting
saying,
some targets here.
concerned about this rally and this concept of the pivot. They really want to be careful about the market getting ahead of them. And I don't think they're as much concerned about equity markets. I think they're much more concerned about fixed income markets, because that's driving so much of
Still
demand
green on the trend bar.
corporate finance, etc. So I think
Take
it's
some
really
more
important that we
positions
not
here on
get
the
too far out
buy.
ahead and
Just
think,
wait
oh, we're
and
going to be cutting
see.
because, you know, surely rates will have gone too quick, too fast. I think it's really critical that we focus on where we are in terms of inflation. And inflation, yes, it may have peaked, but it's still at very, very high levels. These are not really sustainable levels. We don't want to get into the stagflation that we did in the 1970s, where we just didn't do enough to kind of kill it all at once.
It reminds me of the note that Bank of America put out in the last couple of weeks. Why are we all so happy with
US30 pushing back up again, following that buy signal.
Judy, thank you.
So
really thoughtful stuff.
it's a
Judy
green
Bourdieu
trend
just
bar, so it's
pushing
good
back
for
against
buys
this
now.
idea that this consumer is strong, resilient, because when you look at some of these statistics out there at the moment, there's some clear cracks for you across this country.
Let's see if it's going to
the equity market
reject off the 236.
We're positive by about 0.1%. Coming up, US nat gas prices rising for the first time in a couple of months. They are surging now. We need to talk about gasoline prices, which have been falling too, and now starting to nudge higher.
We've been very lucky over the better part of the past 5 to 7 years, you know, really ever since the fracking
15 minutes till the pending homes. I'll be our final
we've been very
trades.
fortunate to have low energy prices, you know, effectively across the board.
That conversation coming up.
Like I say, we're watching cable as well. Still can't break that supply demand zone. Look, people still want to sell off on it. It's got to get into that zone for buys to shoot up. So oil shot up. Yes, we're just getting out of the oil trade. Brilliant. Excellent on the oil. Yes, perfect. So we got on oil, we got 35, 50, 65. So we got $100. So $100 on that trade there on oil. 5 positions.
No one covers
Posting that into the group.
There's a sense it'll get to 7% in the coming months. Do you see that coming through?
There was something of a grey zone battle between Taiwan and China. Where are the job cuts to come
That's
from?
thanks to the signal again.
Reach and resources from more than
Just have to hold.
20 countries. The moment news breaks, 24 hours a day. Bloomberg, your global business authority.
AI is the chance of humankind to really understand.
Let's see if US30 is going to pull back.
Of that is true. How confident?
Like I say, we've just got the cable to enter into now, and US30 oil I'll leave alone now till the EIA news.
Was it slower or faster than you thought at the time?
I think if I had a 35 or 40 year prediction task, I would have been more or less on track as to where we are today. But I would have predicted steady linear increase over time. But instead, the field had very minimal improvements until the last 5 or 10 years. Then it really took off. I think we ended up in the right place, but I was very wrong about the trajectory. To this date, we still know very little about how the brain works, but these machines are getting ever more powerful. And I feel in some sense, we did end up learning what human intelligence is by learning what it is not. If we exclude all the things machines can do better than us as what makes us unique in our human intelligence, then now we can rule out many things, because AI or machine learning has become so good at so many things that what's left must be the key aspects of human intelligence.
So we've got 10 minutes till the news. And then will cable make that move for us?
Going into September, that is 50 basis points. That's where I've been since the last meeting. But I have an open mind about whether 75 is going to be necessary. 50, 75 doesn't just depend on a data point, even an important one like the CPI. I like to say that we're data dependent, we're not data point dependent.
Nobody covers the Fed like Bloomberg, your global business authority.
Very lucky.
Pound again, not rejecting out of that zone.
Years, you know, really ever since the fracking fracking revolution back in 2015, we've been very fortunate to have low energy prices, effectively across the board, and that is a dynamic that has very much shifted here over the course of 2022 thus far. I think not only is this going to be a headwind for the consumer, and there's a whole social aspect to this that we need to be cognizant of as well.
Democrats gearing up for midterms, embracing the recent relief at the pump. Gasoline prices actually climbing overnight after recording the longest streak of decline since 2015. We've had 70 straight days of declines. On the latest from DC, let's get to Bloomberg Government's Emily Wilkins. Hey, Emily.
Hey, Jonathan. Well, Democrats are feeling particularly good today, in part because of gas
10 minutes
prices,
to go.
and in part because of some of the races that we saw last night in New York as well.
So it's going to be an interesting trade as well.
I think if you're trying to get a sense of that,
Oil
November, the one
still
race
ranging
that you really
around.
Need to look at
Like I
is
say,
that
that was
special
a
election that occurred
risky
in New York's
buy. But it just
19th
shows you,
district.
because we
It's
had the buy signals above our baseline. The trend was right, but the RSI didn't go green, just flashed green for me to grab that profit here. And I entered, which is about midpoint there, look. So managed to get 15 pips out of that, so that was a good in that respect. But again, you've just got to sit and wait for confirmation, ideally, you know what I mean? It's,
and get them out to the polls and be able to get some wins. Now, of course,
and again,
Republicans
what I need to do on
are
this
still very
is
likely
also
to be able to take the House in November. They have historical precedent on their side. Obviously, prices at the grocery store are still pretty high, even though we're seeing prices at the pump go down. So it's going to be a very interesting November, but I think Democrats are taking a lot of hope after the election results from last night.
Gasoline prices have been coming down, of course. Natural gas prices have been going the other way, so you've got some relief at the pump and then pressure with the electricity bill. You just cannot get a break at the moment on so many of these fronts. Emily, thank you.
A big zone here, look.
Over the last week
the zone
so,
here
94.24 on WTI Brent
on oil, just right up against. Trap between these two supply and demand zones, sold down to it, people bought again. Like I said, the buy wasn't particularly, I mean, I got $100, but again, a risky little scalp, that one. Should have really waited. The buy here, look, was again a bad one if you're taking that, but you shouldn't take it when it's against that demand zone. The sell was not valid. That buy again was valid again, but again I wouldn't have taken it because it's right against that, so the sell was a good one. And obviously I just took this cheeky buy here, which again I really shouldn't have done, but I risked it for a biscuit.
Former Treasury Secretary Larry Summers had called the worst idea.
That's what's US30. US30 putting back to 382.
Debt loan payments. The president is expected to
I'm just going to wait for this pending news.
Per a borrower, but that will be capped. Usually around what if you make around $125,000. So the president is expected to announce this today, but Jonathan, we should note there are some more details they are keeping very close to the chest. So potentially some of this could shift. This is a tricky moment, of course, because the president is getting a lot of pressure from the left wing of the party saying that they should be forgiving a lot more in student debt. This is something he campaigned on. And then, of course, though, this comes ahead of a midterm election where he wants the youth to come out and vote, but at the same time,
nice push down, trying to break that 382 look.
Those inflationary pressures that Republicans we already see are running on.
We've talked about the earnings gap between young college graduates and their counterparts without degrees. That earnings gap has been getting wider over the last few decades. Anne-Marie, as you know, and we have talked about this online and offline, the more we both look at this, the more complex we realize this situation actually is. How is the White House going to navigate that, as they are likely to get some pretty strong pushback to this idea?
Well, it's very difficult because they are not going to make everyone happy at all, no matter what direction they take. And I think there's two really key data points, Jonathan, to bring up. One of them is it comes to who actually has this student debt. One statistic, just 41% of first-time college students earn bachelor degrees in 4 years and only 59% in 6
so on
years.
US30, just making sure we're right for our next trade, pushing down up, beautiful.
Why did they drop out? But they're
so here we go, pending home sales, 5 minutes to go.
Did not get those degrees, and they're not making, potentially not making those wages. So there's one issue. The other big issue is, of course, the average student debt owned by Black individuals with bachelor degree holders is $52,000. By race, Black college graduates own considerably more than others on average. These are the big issues the president is going to have to really walk a line when he's discussing this today, and that is why you're seeing the likes of the NAACP coming out and saying this is not enough.
Buy signal on cable.
Not enough, and it should be $50,000.
Now into that demand zone. Perfect. Look at that.
I'd love your thoughts on it. 1 in 6 American homes have fallen behind on their utility bills. That's tragic in many ways. AMH, how do they confront this in Washington?
Well, when Jack Farchi was talking about
I'll take 5 positions on that buy. I'm going to wait
till the winter in the
another
United
few
States,
minutes.
because natural gas prices are going up in the U.S. You're seeing them as high as we've seen.
See, this is a
in
bonus
2008,
trade.
and you're seeing this phenomenon around the world. And
Brilliant.
it can only get worse.
Got in there, took it. There we go, got out. And we managed to get another 4, 7, 10, 11, 12, another $25 there. Yay, brilliant. Again, was just cheeky on that because I wasn't really ready to enter cable, but I saw that buy. Everything lined up. Took that. Got in before the RSI. Again, it might pull back a little bit now, but that buy signal is where we need it to be for the next 5 minutes, and we're good to take the buys up to that New York cable line. Again, we're just looking for 10 pips. And what, 20? But yeah, just grabbed 5 pips there, that was good. 4 or 5 pips. Even with commissions and spreads, still made 25 bucks.
Anne-Marie, AMH down in DC. Anne-Marie, thank you. Equities unchanged.
In 30 seconds that was.
Squeeze in some sector price action. Let's get to Abby for more. Hey, Abby.
Hey, John. Well, yes, equities are unchanged. It's a real snooze fest. I know you're not supposed to say that, but we're looking at the smallest range going back to New Year's Eve of last year. Not surprisingly, most sectors are not moving all that much. But
there's a sell. Come on. We should wait for that sell, you see. I could have held longer, put some more sells in on that. Beautiful red trend, red.
Retail sector.
Great. Back to our breakout zone, back from the open, you see. So this is just all a fake out, this buy. Here's the real move.
In breaking news, oil prices are surging.
The world can be a noisy place.
Stock prices are set to soar.
You can call it what it is, a snooze fest. We'll get you the trading diary up next.
Back in a sec then, we'll trade this final trade.
A lot of the satellites have propulsion systems. They can kind of move to get out of the way of each other or change their orbit a little bit. It's a service that you guys offer to help these companies know how to maneuver their machines.
Yeah, we offer a collision avoidance service. It's a subscription service. We'll send you an alert up to 7 days in advance if your satellite's going to come dangerously close to a piece of debris or another satellite.
Companies have been doing that for decades, moving satellites around, but it's sort of like a harder problem now.
The risk of a collision is a lot higher now, just because we've installed so much more hardware into space. You have a big collision, it creates a cloud of debris, and now all the other satellites are flying through this whizzing mess of debris. As we add all of the new satellites into space, the risks of the collision, the likelihood of the collision is going up.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Equities unchanged. Here's your trading diary. Pending US home sales at the top of the hour. US GDP and another round of jobless claims on Thursday. Plus, the Fed's annual Jackson Hole get-together in Wyoming kicking off. We'll hear from Chairman Powell on Friday. And we round out the week with a host of economic data and the team.
Okay, here we go. Final trade.
Kathleen Hayes and Mike McKee at Jackson Hole for you over the next couple of days. From New York, this is...
We're on US30, pending homes. The sell signal hasn't broke through yet. Make sure we're logged in on US30. We are. And here we go. The countdown has begun. Let's see what this delivers. Could be interesting. "20 seconds. Good luck, everybody. Thank you for joining me today. It's been a pleasure. And we've done something like 32 trades and taken about 5 losses, so well happy again on quite a volatile week. And like I say, tomorrow's going to be a quiet day because of the Jackson Hole. Probably not trade, or probably just do very minimal. Same as Friday. So let's see what we can bag on this one. Pending homes. Here we go. -1, so it's better than expected. The main move better than expected, so let's see if we get a push up on US30 or it's going to drop. Pending homes, it's waiting now for the move. You can see there.
And while many in the scientific community predict
1%, -1%.
Some in the private fusion space believe we'll get there in just a few years, as soon as the 2030s.
Brilliant, and we've got some nice buys on that. Perfect. Yes, what a great end. Yes, beautiful, beautiful, beautiful. Hope you all caught that. Better than expected. Went with the news that time. US30 did. Perfect. Let's just have a look what we got. I managed to get nice buys on that. The results, yes. Both results were better than expected, hence the push up.
On dark matter, you will make aging optional. Because when you subscribe to Bloomberg, you won't just get new.
And there it is. Look at that. Is the buy signal kicking in? Perfect. And we managed to get 10, 25, yeah, $30. Another $30. So it's been a great little session. That's me done. Like I say, you've got to do is wait for the result and see which way the market goes. And the market this time went with, trend bar confirmed, pulling back. It might push up a bit more. But that was a nice little end to our session. Love it. And there you go, pending homes was better. It was only dropping down to -19, only just, I mean, pretty much the same as year on year, same as last year, and actually up 3% on the prediction. So perfect. And yep, we'll be back later on in a bit to trade have a look at the crude oil for those in the group. There's oil pushing back up now. We're going to wait for that EIA news. I'm just going to put the arrow on there. But I'm hungry, so time for some food after a good morning session. And we finished best part off with, ooh, blimey, we're 20%, at least 20-25% up for the day on the account, so perfect. And that's what it's all about. So we'll watch this oil news take place in the group as well. So yep, thanks for joining me again. Please give us a like, and we'll catch you on the next one. Homes News win. There you go, just shows you if you pick the right things, that's what can happen. US30, there you go, rejected after that news, doesn't matter. We got in there, grabbed those pips, and now it's dropping off. But that's that new spike that we love to trade. We love to trade. So yeah, great day. And like I say, thanks for joining me, and yesterday as well. 2 good live streams. Next week, of course, we know what next week is. NFP. So we'll be live for that. That'll be our next live stream, so catch that one. It's always a popular one, and we've got this new setup now with the signals, so we're looking for bigger results this time in the NFP. So join us for that one. Subscribe, make sure you know when I go live with that, usually about half an hour before the result. And until then, trade safe, take care, go to the website, join our group, and yeah, see you soon. Take care.